Hi, it's Dr. Betty Robin with the Dentistry Rising podcast. You guys probably know me as a dental practice sale broker from Orange County, California, or as a dental attorney from Tustin. I've started this podcast to really try to help you do better in your practices quicker and let you know what I think are the secrets to success in dental practice. I've owned 3 different dental practices, 2 that I operated myself and 1 was associate run. And I've also had thousands of clients as dentists. So I have a clue on what works and what doesn't work. So I hope this is helpful and happy listening. Hello again. Today we're going to be talking about how your tax return should correlate with other practice documents, both other computer reports and other financial documents. Because some of you are still kind of confused on this. We did a podcast about how to determine profitability from the tax return, but let's go a little bit further about what you need to do, or if you're a buyer with the tax return, or what you need to look for if you're thinking of selling soon on your tax return. Okay, I'm going to try to make it as easy as possible. So we're going to look for 4 main things. And the initials are IRE or IRE, like angry, fury, ire, and the cash flow, which again, we did a podcast on the cash flow. So IRE, number 1, I stands for income, which is line number 1 on the first page of the tax returns, which says gross receipts and sales. Now, sometimes it's even kind of hard to find the first page of the tax return. There's so many signature pages and that kind of thing. So make sure you go to the first page of the tax return, which generally has 1120 at the top left-hand corner. Or if the doctor is not incorporated, it would say Schedule C. So once you get to the first line, you're looking for that gross income number. That gross income number on the tax return should match to 2 things. First, it should match to the collection reports from the computer. So whatever collection for the same period of time that the tax return is for, which is usually an annual year, but not always. And if it isn't, it'll say that also at the very top of a tax return what period it is for. So that matches with collection reports from the computer. Second, it matches with the doctor's bank statements. Again, of course, for the same period of time. It is important to take time to make an Excel document of those bank statement deposits, and those should be just about the same. They may never be exactly the same, but I would say within about 5% of the tax return numbers for both the collection reports and the bank statements. So that's number 1, what you do. So I'm going to just review it one more time. The gross collection number, line 1 on the first page of the tax return, should match to 2 things. The collection report from the computer system, and secondly, the bank statement deposits added up for the same period of time. Okay, second thing is rent. So whatever rent is shown on the tax return, it's important that you divide that by 12 and see what the monthly amount is, because sometimes sellers leave out CAM charges or other rent expenses when they're telling you how much the rent is. So that would be obviously a very accurate number as to what someone paid for rent. The number on the tax return divided by 12. That should match to both what the seller told you that they're paying. And if it doesn't, ask the seller or the broker about why is it more. It's rarely less. So why is it more, and how much is the CAM, and what exactly is included in the CAM? So if it doesn't match up, there should be a whole nother discussion about why it doesn't and what the increase is. And it should match to the amount in the lease. And, leases aren't the easiest thing to read, but you should read the lease I mean, you should really read it from back to front to back, but you certainly want to read the amount of rent and the amount of CAM and the amount of increase. So that's number 2. Compare the rental amount on the tax return to what the seller told you on the info sheet and to the lease. Okay, number 3 of IRE is E for employee salaries. Now, employee salaries can get a little trickier. Obviously, there's a line item on the tax return for salaries and wages. And for some practices, everything is in there. And that's obviously the easiest. But some practices have just the like assistant and front office wages in that category. And they may have a hygienist in another place. For instance, it could be under cost of goods sold at the very top of the tax return, almost right under the gross income, or it could be on a schedule in the back under independent contractors, because a lot of offices do pay hygienists as independent contractors. And you know, probably from one of my other podcasts, this isn't really the proper way to pay anymore, but it's still very commonly done. So number 3 is employee salaries. So we want to do a couple things with those employee salaries, some of which we've talked about some parts of. So if it's a repeat and you got it the first time, just skip over this, obviously. So you want to compare the total salaries for the same period off the federal or state payroll tax returns and or the W-2s for each individual employee. So you have a total amount of salaries. And that amount then should match what's on the tax return. Now, if the hygienist or an associate dentist is paid as an independent contractor, then you should have a 1099 for that person. And that part also should match, again, to one, cost of goods sold at the top of the first page, or independent contractors listed separately on a schedule. Now, remember, I like to kind of focus on the employees because it is the single biggest expense of a practice and of most businesses. So you really want to know what's going on with employees. So you're matching the employees to their W-2 and to the payroll tax returns for the practice, which can be federal or state because they're the same numbers are on them. For independent contractors or for hygienists, whether they're considered W-2 or 1099 employees, you should compare the amount of that individual person's production to their compensation. And so if the hygienist is paid $50,000 a year, they should be producing at least 3 times that. 3.5 times that is really an ideal number, but it's hard to achieve. So on the hygienist, you want to break them apart and look at each individual hygienist and see what they're producing compared to what they're paid. I mean, if you have somebody that's not doing at least double, that's a practice you may want to walk away from. That's a very, very hard thing to change, unless the person's retiring or that kind of thing. So that's the 3 of the things you want to look for on the tax return. The 4th is cash flow. And I did a whole podcast on how to determine the cash flow from the tax return. So you can go back and look at that if you didn't listen to it or don't remember. So again, just to go over it really quickly, you have 4 main things we're going to look at on the tax return and compare to other documents. And that's what we're talking about, what you need to compare to on the tax return. So 1 is gross income that you're comparing with collection reports and bank statements. Number 2 is rent that you're comparing to what the broker or seller told you and what's written in the lease. Number 3 is employee salaries and independent contractor salaries if the hygienist is paid that way. So you're going to compare those with each producer's 1099 or W-2 and the federal or state payroll tax returns. You're also going to look at the individual production for producers like hygienist or associate dentist, and we'd like to see that as 3 times or more. Okay, so that's the main things you are matching on the tax return. And I hope that's a little bit more clear this time. If you have any questions, let me know and I'm happy to answer them. Thank you. Have a great week. Dr. Betty Robin. Please subscribe on iTunes so we can get better and better at helping you make your practice dreams come true.